Hello and welcome to this week's installment of Nucleus Investment Insights. My name is Mark and I'll be hosting today's webinar. The agenda today, our topic of debate is if the Australian economy will bounce back from recent lockdowns and how will it look? We have two heavyweights here to go head to head in the ring today. And on one side, we have Leith in the black corner, who will cover why he believes Australia's rebound from recent lockdowns may be patchy at best. And Damien in the red corner makes a case for the Australian economy rebounding smoothly by us learning how to live with the virus. To further introduce our host today, Leith Onselen is our chief economist here at Nucleus Wealth. Good day, Leith. How are you?
G'day, Mark. G'day, Damien. Hello, everyone.
Yeah. And Damien Klassen, head of investments here at Nucleus Wealth. Good day, Damien.
Hi, Mark. I think I've been mischaracterised as a bull here, but I think it's probably slightly less bearish than Leith. But I think we're both on the same side of the boat.
Hey, you're not a bull. You're a heavyweight.
Leith's hanging over the edge of the balcony on one side of the boat, and I'm just like off from centre. But anyway, let's get into it, and
let's have some fun with it. Absolutely. A reminder before we get started, although. Please do subscribe to our YouTube channel if you haven't done so already, and click on the bell to be notified when we go live or have a new webinar that you can watch. Or alternatively, follow us on your preferred podcast platform. For those listening in live, feel free to drop in your questions in the YouTube live stream chat to have them answered along the way. And now, gentlemen, over to you. Let's get ready to rumble.
All right, we'll start with you, Leith. Do you want to kick off with the points from the slides and where we are, I guess, on the virus?
That's right. Well, obviously, for those of us who live in Sydney, Melbourne, or Canberra, we know the situation pretty well. Like the Delta strain of the coronavirus is unfortunately getting a little bit out of hand, and we're looking at quite a long period of lockdowns. How long is a piece of string? But I think it's pretty clear that we're not going to get back to virus elimination like we had the previous episodes, like the Victoria's winter-spring outbreak last year, the few little outbreaks New South Wales had, and Victoria's smaller outbreaks earlier this year. I think we're heading into a situation where we're not going to reopen because virus cases has gotten down to close to zero. We're going to be reopening because enough of the population has been vaccinated. There's a bit of debate over whether we open up at 70% of adults. National Cabinet said, loosely agreed to 80%. Some other economists are saying 90%. But I think what's pretty clear is by the time we do open up later on this year, hopefully, the virus is going to be with us. And once we do, we're going to be experiencing a similar situation to other places in the world where cases suddenly explode. And I guess my view is, economists around Australia, like we all know that GDP is going to go backwards in the September quarter. That's pretty obvious with Victoria and New South Wales shut down. But the mainstream argument is that, and indeed Treasurer Josh Frydenberg said yesterday, that they're anticipating a very strong rebound similar to like what we experienced, last year. And my view is that I don't think it is going to be as strong for two fundamental reasons. One is that obviously the virus is going to remain with us, and we're going to get a case explosion, and it could mutate. And the pure fact that it's going to remain with us is going to hold down. It's going to keep some restrictions on. It's going to keep people a bit more pessimistic. It's probably going to shut down the CBDs for longer, and it means it's going to have a more patchy rebound there. But secondly, and equally as importantly, last year we had an intense amount of COVID stimulus being pumped out right across the economy, whereas this time stimulus is a fraction of what it was last year. And my view is that the governments will have to step up, as well as the central bank, obviously the RBA, to offer more stimulus to the economy to ensure the rebound is stronger. Because I think at the moment, most economists and the government have got it wrong. And they think that the rebound is going to be stronger than it is. And because of that, they could make a policy error in not stimulating enough. So I guess that's the overview of my case today. And also, I guess my central view is that the recovery is going to be weaker than than expected. It's going to be patchy, and that means the we obviously need more stimulus.
And so I've got no complaints, I guess, in a big picture sense with that. And I guess the real issue is the question of when economies start to live with it. And I guess I'm thinking more of I'm looking at it from two different angles. One is the Australian angle, where I completely agree we're going to be behind. And you spoke about the stimulus, the amount of stimulus that was given to companies in states that were basically weren't locked down anymore. So they went through that initial phase, and then they were open. Victoria was still locked down, so you could see where the companies there really needed it. But I think, as you said, Leith, there's a lot of extra stimulus out there for people who just didn't need it at the time, and so that sort of meant that there was all this gas poured on the fire. So when it finally lit, it off it went. So yeah, completely on board with that. I think I guess it's this issue about when does the world begin, and I'm thinking more from a global perspective, when does the world start to live with it and start to accept the fact that, look, it's endemic, and populations just get on and get on with their lives, and it turns into goes from the first story on the newspaper to the fifth story to the 10th story to somewhere in the middle. And I think it's certainly going that way in the UK. I think within the US, this latest round, I think there's a certain I guess resignation to what it is, and I think there's signs that although services are down, they're not down anywhere near what they have been in prior episodes. And so I think the I guess the effect on people is on economies is becoming less. And I guess there's probably the one key chart I probably should have thrown it up on this was you will show the one for Israel, where you're going into the details about that, but the chart I'd throw up as well is the one for India. And India is where the Delta virus started. It absolutely tore through that population and made a huge difference to the huge number of deaths and everything like that, but it did fade away as well. So it's not as if it showed, and that I don't think was because of interventions by the governments. That was purely just that it burned through the amount of the population that needed to burn through, and then it was the people that were going to die from it had died, and now it's sort of an underlying background issue. So I guess that's where I'm coming from, is that yes, it's more virulent, but it also means that it can rip through populations faster, and Australia is probably a lot more at risk from that perspective, in that we haven't had widespread COVID cases through that other countries have seen. And so the death rates are going to be significantly higher. But on the flip side, India is, I don't think anyone would hold up as being a model health system, and they're through it and out the other side. And so I sort of look and say, well, if that can happen to them, then that'll happen to other countries as well.
Yeah, it's a fair point. I mean, I guess India is more of it's kind of like the Spanish flu situation when in the 1919, 1920, etc. Like the virus ripped through very quick. We didn't have vaccines back then, and then it just faded to nothing once it ran its course. But yeah. I guess yeah, you're certainly right when you we're probably looking at two different time frames here. I'm sort of looking at the rebound in the expected rebound in Q4, Q1.
Yes.
Your story is probably more of a stronger rebound coming Q2 next year, etc. So it could be a timing thing.
Yeah, no, I think you're right, and I think we're on the same page for a lot of this stuff.
Totally.
It's that Australia's going to be lagging, and because we've had such a great performance so far from the virus, or up until whatever a month or two ago, such a great performance, it actually means it makes the next stage a lot harder for us. Given our vaccinations are so far behind everyone else as well.
Yeah, and the other thing, to your point, the UK obviously had a very high infection rate, and it's also had high vaccinations. So now the UK kind of wore the costs last year, whereas we sailed through really well, and our comeuppance is going to come now in the next 6 months, whereas the UK is sort of going through the other side. In some ways, us and I guess New Zealand to a degree, if it gets out of hand over there, are sort of lambs to the slaughter. Because we did so well last year, we actually got less antibodies, less people have already had it, so we're kind of more susceptible now. So I think that's kind of my central point. The reason why there's actually a chart I've put up in the chart pack, which kind of compares us to Israel. And the reason why I've done that is, I guess it's cherry picking data, because obviously Israel's having a pretty bad, that they were one of the first nations to get highly vaccinated, but they're also having an explosion in cases back to what they were previously. Their hospitalizations are going up. The reason why I chose Israel, and I could have someone say, well, why don't you use in the UK? The UK is having a much better result. But the reason why I chose Israel is Israel use Pfizer as their vaccine, and that's obviously the preferred vaccine in Australia, which most people have used. And it does seem that, at least anecdotally, and there's been a bit of evidence, Pfizer's not as effective against the Delta strain. And in fact, the UK, which uses AstraZeneca primarily, is doing a lot better. And so there is a argument that we might have backed the wrong vaccine horse, which could mean
Again.
that. But yeah, look, I'm not throwing shade at the government here, because nobody's got a crystal ball. This is just, we learn as we go. But it could be that that we end up getting a worse case surge because we've vaccinated primarily with Pfizer, which is why I've been looking at sort of Israel. Which, and obviously that if that happens, well, then we're looking at third vaccinations like I do in Israel. We'd probably get a less strong rebound.
Yep, I guess the other thing is the studies seem to be indicating at the moment that the Pfizer effects might fade faster than the AstraZeneca ones as well. But that's which is actually if there's a big surge coming and we're all getting vaccinated at the moment, then that actually might even play in our favor a little bit. In that, I guess what I'm saying is Israel might have the issue that they vaccinated last year
too early,
and now they're yeah, that's right. And now and it's fading, and so so as the effect's fading, we've got this new wave hitting. Whereas we're vaccinating as the wave is hitting, so maybe that's an offset. But yeah, the net effect is though, Australia's going to do it tough on that. And as we saw in a lot of countries, I think there's this part about people changing their behaviours. If governments don't lock down, then people change their behaviours to match what they think the perceived risk level is. And I guess that's where, the part we don't know is that I think there's I think that the perceived risk level in places like the UK or the US has dropped quite dramatically now. It's basically, look, you're vaccinated. If you do get it, you might get sick, but you're probably not going to die. And you probably won't have longer, if you're double vaccinated, you probably won't have longer term issues. And so therefore the perceived risk level is a lot lower and people keep on doing things. Whereas potentially Australia's yet to go through that. We don't know what the perception side is, whether we're just over it in certain places and we're just happy to get out and do things despite the virus running rampant, or whether we do have to go through that, the phased risk part, particularly as this is affecting kids.
Yeah, and the problem with that is it's obviously it's the uncertainty, which is another reason why I'm sort of a bit more negative on the view that we're going to have a really strong rebound like we did last time, because all this stuff is just the outlook's so uncertain. We don't know how people are going to react. I think if it does run rampant, there is a risk that people do sort of go into their caves a bit and stop going out, stop spending, etc. So all that stuff would.
This is Morrison's caves.
Yeah, that's right. Yeah,
in the movie. That's
But it's just So look, I don't really have any hard data to point to. The only thing I've got to point to regarding why I think it's going to be a patchy rebound is the stimulus money. Deloitte's done some pretty good work. The federal government's pumping in about $5 billion a month in stimulus, and whereas during the peak of the pandemic last year, about $30 billion was going out each month. Now it wasn't 30 billion every month. It was like 30 billion in July and 30 billion in August, and then it sort of phased off a bit. But
superannuation drawdowns.
Yeah, well, that actually includes the 30.
Oh, that includes okay.
30 bill. Yeah, so direct income support last year, so not including super, but just JobKeeper, JobSeeker, etc. was about 17 or 18 billion a month in those peak months, where it's 5 billion currently. And then once you add the superannuation withdrawals, the state government stimulus, all that sort of stuff, it's a lot less. That being said, obviously households and businesses banked that money last year, so we do have also pent up stimulus from last year which can be spent, which will help. but then we've got some other factors too, like the home builder stimulus has brought forward a ton of housing construction, and that's all predicted by the industry and others to stall next year and to start actually shrinking. So that's going to weigh on it. And then we've also obviously got the crash in iron ore market, which doesn't affect directly, except that, I mean, obviously affects company profits, but it could stop the government from being willing to stimulate as much, because it won't be getting flooded with as much corporate tax receipts. So, you know, I guess all this stuff just sort of weighs in the reason why I don't think I think economists have been a little bit too bullish on the rebound from these restrictions, because, you know, the virus is going to be with us, and, you know, I just don't think it's comparable what happened last year to what's going to happen this year. I think it's going to be a lot more patchy.
Yeah, absolutely. I'm completely on board with you there, and just that whole part that you know, the amount of money that was for a lot of younger, less well paid workers, they were getting more money as on JobKeeper than what they were.
And the coronavirus supplement, which basically doubled JobSeeker, the old New Start.
Yeah, so it's interesting actually. So Indeed did a survey across people who weren't working, who were still in the unemployed part, and they were looking for jobs but not urgently, I think was the sort of was the designation. And they asked them, you know, what are the five? They asked them which is the most important out of COVID fears, whether you have a spouse that's employed, whether you've got enough financial cushion, whether you've got carer responsibilities, or whether you've got unemployment payments. And so the US, the unemployment payments came last, was the least important in terms of the reason for not being urgent, and that was sort of at 10%. In Australia, it was actually the most important for people not being urgently job seeking at 25%. So 2.5 times more people in Australia said, you know, I'm making enough through job seeker or welfare payments, I don't need to work, as opposed to the US, which I thought was an extraordinary finding. But COVID fears was then the top one in the US, and second within Australia.
Yeah, scary stuff.
Well, gentlemen, I think we've seen some questions coming through. A lot of people, and this is, I think, a genuine concern across the entire country, I would say, is that people are worried about the mental health of Australians. So it's one thing to say that we're going to come out smoothly and not smoothly. And, you know, I think, Leith, you made a statement that, you know, people are going to withdraw and sit in their houses. Could this be another problem? I mean, you know, with the whole coming out of lockdown, yes, you can go out, but you just don't want to go out anymore.
Yeah, I mean, look, certainly, I think there certainly will be a rebound. So there will be a lot of people going out spending, but I just don't think it's going to be as strong as we saw last year, which is going to be, so it's going to be a more muted rebound. I guess that's the, so I don't think everyone's going to be staying at their homes, etc. But certainly, yeah, I just think, you know, the more risky it is to go out because you're worried about maybe getting a virus, and if the deaths start, you know, going up, people inevitably stay home more than they would have otherwise. And also, we're more likely to have, you know, these border battles where I guess the virus zombie states of New South Wales and Victoria continue to be shut out from the other states who want to keep the virus out. So that's going to stifle, obviously, tourism and other things. And really, it's the services side of the economy is going to drive this, because there's only so much stuff you can buy. And if you're actually precluded from spending to a degree, or it's going to obviously stifle economic activity. So,
well, and potentially there's a bit of that in that whole, you know, lots of stimulus payments last year, as you said, Leith, people locked in their houses, and you know, some of the biggest beneficiaries were places like Bunnings and homewares and things like that. But if you bought a new couch last year and you just did up your back patio, and, you know, I know that obviously houses are can be a huge money sucker. And I'm sure you can spend as much as you want to spend, but there's probably less low hanging fruit than what there was last year. There's probably a certain amount of that's already been spent, and yeah, it's an interesting question though, Mark. That thought about the whole mental health aspect. Does that mean people spend more money? Is there a retail therapy aspect to that. I don't know whether there's a potentially there's a part where you get people don't feel good about themselves. So what I really need is a new handbag and a golf driver. And then I'll
yeah, possibly, yes. I mean, I can speak for myself. I've got all the pants with elastic waistbands that I could need now, rest of my life. It's just fallout of sitting at home all day. I guess.
Yeah, I must admit, this last month, my household expenditure has gone through the floor. Like I haven't filled my car up for a month. I've driven it probably 20 k's. My gym memberships have all been automatically cancelled, so saving money there, it's quite ridiculous just becoming a hermit. It's actually pretty good for the hip pocket, but not great for the mental health, especially when you got young kids and a special needs kid at home. It's not much fun.
Yeah, absolutely.
Well, and I guess that's the other part is obviously the virus in initial stages wasn't affecting kids anywhere near as much, and this round, for families with young kids who tend to be some of the biggest spenders in the economy, are probably more likely to want to stay home than some of the older people, I guess, who might not spend as much in terms of services.
I have a question here from Danny, who says, did the Chinese government use any stimulus in last year's lockdowns, or was this all the recovery, all organic demand?
No, heaps of stimulus, and lots of growth of lending and push to infrastructure, lots of infrastructure spending. I think the other thing though within China is China really benefited from the manufacturing from a manufacturing boom when everyone in Australia decided that we've got some stimulus checks, we haven't been spending money on travel and all that. I need to go buy a new couch, or I need to go buy a new whatever, air fryer, or pick your whatever your appliance was. Chances are it came from China, and that's where their industrial production has really boomed. And so they while they had some of their own stimulus, they also were a huge beneficiary of everyone else's stimulus. Somebody in the US gets a check and goes and buys a new flat screen TV with it. That's not stimulating the US economy, or it's a small amount of stimulus for the US economy on the shop that's selling it, and a big amount of from the Chinese factory that actually put it together.
That's very true, yes.
So do you want to run through some more of these slides, Tim? Sorry. Leith? Yes.
Yeah, I don't actually have control of the slides in front of me, but so basically the some of the charts was my view was obviously economy's not going to rebound as strong. There's really only two reasons for it. First of all, obviously, is that the virus is going to linger. Just like we've seen everywhere around the world, as soon as they open up, we got a big case explosion. Some countries are doing better than others. The UK's seems to be handling it pretty good. The numbers there have gone up a bit, but the hospitalizations and deaths, which is the most important factor, they've gone up a little bit, but they're remaining within control, and they seem to be getting on with things. But then again, you've got the Israel example, which use Pfizer like us, and their cases are going through the roof. They're pretty much at where they were in January when it peaked. Hospitalizations are creeping up to where they were in January. Deaths are now trailing behind them. The government's now looking to put in a whole bunch of new restrictions, not full lockdowns, but you could see that here as well. In that we open up a bit. We pretty much open up with a few restrictions, and then it starts to get out of control again, and then we get more restrictions again, and we have this sort of yo-yo effect of tightening and then easing, then tightening, then easing.
Well, and I wonder as well the effect of that on things like tourism. Whereas I think in the US or the UK, there's been a lot more. Certainly, this expectation now, if you want to go and book a holiday, go book a holiday. You don't have to worry about all of a sudden getting locked out of you can't get back to your home state, or you can't get to your holiday house, or whatever it is if it's somewhere else. Whereas I think Australia's probably potentially got that because we do have this yo-yoing and quite strict. There's quite the potential for that to delay or reduce expenditure as well is certainly there.
Yeah, well, and again, it gets down to this uncertainty thing. I mean, I know I love holiday in Queensland. I really should move up there, to be honest with you. But I hate cold weather. I'm always miserable. Winter in Melbourne, complain incessantly. My wife. We usually go to couple Queensland trips every year. And to be honest with you, I went up there in Easter to see a friend who was sick, but haven't been there for the rest of the year. Probably not going to book a trip until I know for sure, and I'm going to wait till the very last minute before I do it next time, because we just cannot be sure. You cannot be confident to book a trip and for it not to be cancelled, because at the moment the state governments, you can be packed ready to go the next day, and suddenly your trip's cancelled on you. You lose a ton of money or whatever. And while that uncertainty persists, I just think it's going to continually, it's obviously going to weigh on economic growth, weigh on activity, etc. Because, how can anyone be confident to book anything outside your state when the shutters can just get pulled? The carpet can get pulled, the rug can get pulled from under your legs, and that's basically the situation we're in. I just can't see it changing within the next, at least until mid next year, because the WA government, the Queensland government, they've already said that 80% vaccination is not enough, and that they'll likely continue to resort to lockdowns or border closures, etc. So does that mean we're going to need 90? How long is it going to take to get there? Are we going to have to? Is it 90% of adults, or are we going to need 90% of adults and kids aged 12 plus? While this uncertainty is in the air, I just can't see. I can't see us rebounding to a sort of normal growth profile.
Now, bankruptcies on a different topic, or slightly different topic. I think we took the view last year that bankruptcies, that about a year would be about the right time for when governments they suspended bankruptcies. We sort of thought it would take about a year before they finally brought them back on again. And then before the year was up, though, a few months before that, we got all the vaccines, and that sort of gave a light at the end of the tunnel to extend things a bit further. I still feel as if we're probably in that same part where there's this light at the end of the tunnel, and if it means trying to delay bankruptcies for a bit longer. But, I don't know. I'd be interested in your thoughts, Leith, on bankruptcies and what that means for, what the odds are and the issues around bankruptcies.
Yeah, well, I think if you're sort of a large company, you're probably doing all right. A lot of them obviously, did very well at JobKeeper. They've got cash in bank, etc. It's more your corner shops, whether it's your hairdressers, your gym owners, those sorts of people that are really people servicing type industries that are obviously shut. They're not allowed to trade at the moment. They got a little bit of money coming in from the government, but obviously it's it's not enough. And also companies that are operating in places which have been displaced. So, for example, your CBD businesses. Activity in the CBD is probably not going to recover for years to what it was pre-COVID, even if we did open up, just because there's been like changing economic, structure away to the suburbs, etc., and changing preferences, work from home, etc., which is going to continue, I think, indefinitely to a large extent. So I think it's more those sorts of businesses that are likely to be wound up a lot more closed shop fronts, etc. I don't have any data around it, but just anecdotally, walking along my strip shops in the suburbs here, which are actually done better, there certainly does seem to be a lot more shutters up now and closed businesses and shop fronts for lease. And I think, at the moment, a lot of them are kind of holding on, getting a little bit of money from the government. But I think just the months ahead, we probably are likely to see quite a lot more bankruptcies. But again, this is all anecdotal and just gut feel, I guess, because there isn't a whole lot of data out there on any of this stuff. Which I've got to say, I've never. This last 18 months has never been a sort of worst time to be an economist to a large degree, because all the data you get is often 3 months behind, a quarter behind, and by the time you get it, like for example, we're about to get the June quarter GDP release next week. It's completely useless because the June quarter was actually decent, but obviously the lockdowns came very late in the June quarter for New South Wales and pretty much not at all for the rest of the country. So by the time we get it, and the labour market data last week was decent, showed a bit of weakness, but all the data we're getting at the moment is sort of backward looking, and it's not capturing what's happening now. And that's kind of the issue we've got across the whole economy. Whereas, if you're someone like me who doesn't have internal data to look at, you're pretty much just running on gut feel. And which is why, most of the data we're getting at the moment is old. It's not really relevant to these really quickly changing circumstances, and it's just making the it just throws. You might as well just get a pack of cards and throw them in the air and see where it lands, because that's kind of the forecast we're all looking at the moment.
Yeah. Well, and that's I think there's a question there from somebody just sort of saying, forced sales of housing and zombie business is going to be allowed to fail versus nothing can fail that we saw last year, and I think that's where I'm sort of along the lines. Look, the housing side, I think there's probably enough scope now that we've seen house prices increase. So that's reduced the risks there. That at least if they are making, they can either delay it a bit longer because people have more of a buffer, or they can sort of. It doesn't have to be a forced sale. It can be or it doesn't have to be an explicitly forced sale. It can be a very strongly worded suggestion that you should be selling this house while you still got some equity and sort of pushing out. Whereas,
in a perverse way, in some ways, these longer lockdowns could actually be, and it's crazy me saying it, even could actually be pretty bullish for the property market, just because if we do end up getting more stimulus, especially from the Reserve Bank, the worse this gets, the more likely it is they could go into sort of negative interest rates, or they could reinstate the term funding facility and make it even more generous. We could actually get lower mortgage rates again.
Yeah, absolutely.
So in some ways, it's a bit like the financial markets, where bad news is good news.
And I'd actually even say, Leith, that the odds are we will get lower interest rates because, as we've been discussing here, we don't think the governments are doing enough.
No.
And so if the government's not doing enough, then the central banks will be forced to do more.
That's right. Yeah. So it's again, it's property's kind of the cockroach or zombie that won't die, and it's
the altar at which we worship, mate, might be the better way.
Yeah, that's right. So which it's kind of a strange situation where we could have all these mum and pop businesses that are going under at the same time as the property market keeps booming, because the cost of money just keeps ratcheting lower in order to backfill the economy. But I think we could very well discover that situation. I mean, the RBA had ceased taking subscriptions to the term funding facility, like it had basically been frozen. The expectation was fixed rates were going to go up. Some economists thought that the cash rate would start rising next year. I never bought onto that view, but whereas now, because of these lockdowns that come along, obviously it's come out of nowhere in the last 2 months. Sydney and Melbourne are now, basically locked down, and the economies are closed. Well, suddenly all those forces are going to go into reverse, and we're likely to get cheaper money, and it's going to prolong the property boom, upside down economy.
Yeah, absolutely. And so actually, but we should, I guess, just clarify for people. So, we've got a comment there from somebody just talking about saying Westpac recently increased its interest rates, and that's right. So what happened is the Reserve Bank stopped their term funding facility, which is where they give ultra cheap money to banks. What we're suggesting is they'll need to bring that back on. If things are playing out the way we're expecting, is not that interest rates are falling at the moment. Interest rates, as you're right, they've been edging up. It's more that the central bank will have to step back in and start that facility up again if we don't see enough stimulus on the from the federal government, which looks like being the case. And then the other comment about no lockdowns and lockdowns are bullish for housing. I think for me, housing's got this issue that if things get really good, then interest rates rise, and that's that's where you start to see the affordability issues really come to the fore, and that's sort of so really good from an economic point of view and an employment point of view. That's where you sort of end up with the negative events for housing. On the really bad side, so if things get out of control and you don't get enough government intervention or central bank intervention, then you get really bad scenarios for housing. And in the middle, though, you end up with this situation where the economy's not good, but it's not terrible. And it just means that the central bank and the RBA just need to keep those interest rates as low as they possibly can and start pushing them even lower. And that's where we're talking about it's not a massively positive view for housing, but it's just sort of there's this short term couple of years where you can see that house prices could either hold up or even drift higher on the back of just cheaper and cheaper funding. But it's all it's a bit of a mirage. There's no sort of long-term backing to it. It's not backed by more rents. It's not backed by stronger fundamentals. But there is a short-term if just so much money gets pumped into it, and all these bankruptcies don't happen, then it is a positive for the housing market. But it's not like a 10-year, 20-year, 15% growth per annum type thing. It's just support.
Yeah, it's sort of expecting a reactionary response from the RBA, which previous 2 months ago we're expecting the sort of interest rates to edge higher, the fixed rates at least, and whereas now it's, if anything, it's going to go the other way. So they'll ratchet lower, and also it could also be that for example, I was expecting APRA to intervene with some macroprudential, mortgage curbs later this year. A couple of months ago, that's what I was expecting, because investor lending was ratcheting up, etc. Maybe because of the worsening outlook now, that gets delayed, which again is positive for property prices, other things equal. So it's just that view that the virus now is likely to lead to looser financial conditions, which will support asset values, particularly property.
Yep, absolutely. Stocks. What does that mean for stocks? For us, it's about getting less exposure to Australia. So all these issues we've talked about are sort of showing how we are. We've spoken in a bit of detail about how we're delayed versus everyone else, and we still have a bit of more pain to go through. Slower economy, more work by the central bank, basically means we need to try and get the Aussie dollar down further, which is a positive for international stocks. So when the Aussie dollar falls, that's good for your international holdings. So we're well overweight international stocks. We hold some international cash as well to help sort of pushing that same direction, and taking a bit off the table in terms of taking some profits, especially over the last month or so. We sort of cleared out of a number of the stocks that had run really hard, and as in the Australian economy, and it was all about getting protection there and looking for the risk offshore more than within Australia. Not sure if we've got anything else you wanted to talk, Leith?
Not really. It's just again, uncertain times. Basically, a lot of this stuff is, honestly, I don't know how the next 6 months to a year is going to play out economically. I just don't think the prevailing view that we're going to get this quick snapback like we did last time, big, quick, really short, sharp V-shaped recovery is going to happen this time. Again, purely.
And sorry, but that's probably given the current settings, given the way things look. Yeah, things can change.
And of course, it could change. I mean,
we can have another sudden big cash splash, and here's all this extra money for businesses and all that type of stuff, and then everything changes.
Yeah, that's right. Well, I mean, about a month ago, we had Gareth Aird on here, the chief economist from CBA, and Gareth and I were joking beforehand, like, man, you should have got me on 2 weeks earlier, because we were both super bullish on the economy. And then obviously the New South Wales, like Sydney, went into lockdown when Gareth came on. It hadn't quite gotten to Melbourne yet. And we were looking at this great data. Like, it was a great set of numbers across the economy. And then we did this podcast here, and we were kind of a bit less bullish. We're like, we're 2 weeks too late. Like, we're talking old news. And then now, since then, it's deteriorated so much more. But there's there's nothing to say that in 6 weeks' time the picture has changed again. It could be a lot better. Sydney's cases might have peaked. It might be coming down very sharply just because of a bit like India. It's just kind of washed through, and we could be looking at a much different set of numbers. So, you can only call it as you see what's in front of you. And unfortunately, as this last 18 months has taught us, things change really quick. And making forecasts at the moment's pretty much it's like throwing darts at a dartboard, because you can make a call one day and then the very next day something happens, and suddenly what you said yesterday is just no longer applicable.
Yeah, well, but that's within our investment universe, that's very much what we've been pushing for people, is saying, look, we're in this phase where we're run by governments and government policy and central banks is what's propping markets up and keeping them where they are, keep getting rid of the bankruptcies, throwing lots of cash into the market, sort of keeping interest rates low and asset prices high. That means our biggest risk is always policy error. And so if governments aren't doing enough, or if they're doing too much, that's always the issue about what we're really assessing here. So, and coming back to one of the questions I guess we've got from guys there about the, should we be investing in tourism and banks? Look, we've got a fair bit of tourism exposure, with a view that, look, and Sydney Airports was a good example. That was one that sort of had a takeover bid from people with a view that, look, airports aren't going to be down forever, and so you need to make sure that that you're not buying companies that are too over leveraged. But we're sort of happy to be taking the bets internationally on the tourism side. But there's some scope within Australia. The banks is a really interesting one. Look, Aussie banks are expensive, globally expensive. Like they're some of the most expensive banks in the world. Banking sectors, partly that's because banking sectors right around the world are really being propped up by governments and central banks. So Europe in particular, the whole banking sector is looked upon as a bit of a basket case, and it's really that the European Central Bank keeps giving them such cheap money. This is what's keeping them profitable. There's an argument in Australia that so I guess what it is that banks are being kept profitable in order that they can keep lending and keep the whole system ticking over. There's an argument in Australia that Australian banks are being kept more profitable than other banks because maybe they're closer to regulators. There's fewer of them. There's only 4 of them, and it's a bit more of oligopolistic. And maybe Australian regulators are happier to keep Australian banks very profitable. So it's sort of a transfer of money argument. That seems like a bit of a dangerous investment one for me. Ordinarily, when the interest rate curves flatten, so where you are seeing problems and long-term interest rates keep falling, that's usually bad for banks, just given their funding. And that's certainly what we saw in Europe and within the US. We really haven't seen it as much in Australia. And so, the question for the banks there is, if you believe, for me anyways, if you believe governments are going to, and the Aussie central banks and regulators are going to distort the playing field extra towards the banks, so the Aussie banks stay really, really profitable, then maybe they're a buy. For me, we're underweight most of the sector with a view that, look, conditions aren't good for the banking sector, and under normal circumstances, you wouldn't want to be owning them under flattening yield curves. But I guess we need to acknowledge that we're as with all these assets, we're central bank and government driven. Maybe they'll throw too much at the situation. But I might, with that sort of background, I'm just not sure if there's any last questions. What have we got here? Polly's deliberately planned to confuse us. PM comes in and says one thing, and Premier comes on and says the opposite. The Health Department comes on and scrambles it again. Is absolutely the case, and it's not. It's that people in different states talking at cross purposes and having shots at each other. It's not conducive for social harmony, and no. It's not conducive for it doesn't feel like you're all in it together and we're all here to it does. And I think with viruses, once you deteriorate into every person for themselves, that starts creating issues. Absolutely. But it's one more reason why people might not be spending as much as they would have last time around when we were all in it together and we're all getting lots more money. But anyway, sorry, I might leave it at that. Unfortunately, we've lost Mark for the internet's obviously having a few problems there. But maybe we'll go to the viewer question of the week, which I'm not 100% sure what that was. This is all Mark's territory. Yeah. Yeah, so I guess the viewer question is really about saying, are you positive or are you negative in terms of the outlook, and do you think we will come out at this as fast as we came out last time? So I'm not sure what else I need to talk about in the closing. I've managed to avoid this, so I think highlight to click like and subscribe to our video. If you've got any further questions, you want to talk to a planner, we do have planning services available. And make sure you pass this show on to any of your friends or relatives who you think might find this content interesting. Thanks for coming on, Leith, and we'll leave it at that.